This is a market review for Wednesday, February 26th, 2025. On the daily candle, we had a relatively small day, uh, to be expected with how large Friday, Monday, and Tuesday were. Um, but I did expect us to play a little more bullish today. My bias going into the day was bullish. It's kind of hard to tell in the 1 hour, but London session was playing bullish and then reversed. Well, I actually don't know that it was. Scratch that. I'll talk about that on the 15-minute because this is just confusing. But market swept these lows, came up, and then started playing bullish, took out these highs, which is the move I tried to catch. And then lunch happened, and we went against what was profitable, but we really went. So it came all the way down here, below these lows. Not quite to constant encroachment of this hourly wick down here, and then expanded up from there. Now, on the 15-minute, you can see here we're playing bullish, right? And then we kind of consolidate, right? We kind of just go flat. And then, in my opinion, we kind of start to tip over a little bit, right? We start to reverse. Well, even if we played strictly bullish in London session, we'd play bearish New York. Or if we reversed in London, we'd play bearish New York. However, with what I saw yesterday and what I know about the weekly bias, I knew that we may play bearish to take out these lows as a retrace, but I'd like to see us have some bullish price action. And we get that for the first, well, for AM session. And then again, lunch comes in, kind of takes everything down in the speed the market should run, because AM session was a little slow. Lunch did its thing, came all the way down. Was expecting lunch to be bearish. This bearish? Absolutely not. And then we tried to make our way back up for PM session. On the 5-minute, we can see an inverse here, which kept price for a long time, right? Gap between these two, validated here and here. Once we get above it, price comes down and doesn't go below it. We get an expansion above these two highs, retrace back to the 5-minute, and then very choppy price. I can see all these wicks up here. Take out, well, that's actually not a high, it's the top of an hourly for value gap. Struggle there a couple times. I believe we have an SMT of these highs, and then we kind of cascade lower below these lows, still within this 5-minute here. And then we start playing bullish again, or attempting to. And then I assume Trump spoke here, which caused all that. Now I'll go over my entry, well, when we get there, but we can see 9:30 market opens. We rally up, create an SMT, well, first SMT of these lows, creates the rally. SMT of these highs causes a retrace. We close below this for value gap. We validate this for value gap here with this rejection here between the high of this wick and this wick, right? That's the rejection. We kind of close above it, and then we kind of close below it, and then we go up. It's very, very messy. But what I took was inside the macro, I was expecting price to come down, retrace into this 5-minute inverse, which on ES, here, that's the 5-minute, sorry, which on ES is this 5-minute right here, right? So I took it long once this candle closed here, So I was long in here, and then 10 o'clock news stopped me out, because if we pull up NQ micros, my stop loss was at constant encroachment and a little below. Now, this 10 o'clock news had a significantly larger effect on the micros than here. If we look, this is a 10 o'clock candle on the E-minis. Right, I would have still been in. Mind you, I probably would have gotten stopped out here, which would have sucked because it would have ran all the way up, but I would have been in. So that's unfortunate. However, the more important takeaway from today that I would say is I need to look between ES and NQ and find out which one is looking better, which one has cleaner price action. So if we look between the two, we're both down here, we both rally, we both invalidate this fair value gap here. However, when it comes to this inverse here, see how unclean this is? Like we're one tick outside it on the upside, and we close one tick outside it on the sell side. Not very clean. Does it count? Does it not count? Who knows? However, on ES, we cleanly close above it, and we cleanly come down and reject it, right? So in my minds, from now on, I'll be looking at 2 in this light, because I only, up until now, I only use ES as a tool to look for SMTs, right? But now looking at this and seeing how much cleaner, how much more expansive this price action was compared to this, right? Makes you think, right? Because would I have entered here? No, I wouldn't have, because my model, I need either an SMT and a fair value gap, or in the macro, I need a confirmation and then a fair value gap. Right here on ES, confirmation, inverse right here. Boom, inverse. So entry would have been here, stops, maybe constant encroachment this wick, maybe constant encroachment this 5 minute. Profits would have been profit 1 here, profit 2 up here. A 1 to 3, I might have been looking to push it, but based off this price action, I probably would have just cut it here, if I'm being completely honest. Because what? This is a whole lot of candles. It might tell me duration. I don't think it does. But 74 minutes. So an hour and 15 minutes basically for a 1 to 3. So is it unfortunate that I got stopped out on NQ or on the minis? Yes. Is it a lesson to look between ES and NQ to see which one has cleaner price action, to take it there? Absolutely. Now, if they're even in price action, I'll take it on NQ, because NQ usually has longer expansions and just more favorable active price action, in my opinion. So we'll do that. And then, of course, this retrace down to here was much lower than this one. This one would have stopped me out at break even, whereas this one just stopped at a 5 minute order block, and I would have been in at break even before the rally to this one. So, lesson learned. because well, no, I wouldn't have, right? Because if I was still in this one, I had my stop loss below this, I would have gotten profit 1 here, and then I would have gotten out at break even here. So I wouldn't have even been able to catch up here. But moving on, we see the macro here, whole lot of consolidation. The macro created this low right at consequent encroachment, this inverse expansion, taking out highs. Oh, again, sorry, forgot. It's not a high, it's the high of a fair value gap. We get there, retrace, kind of meander around, create an SMT here, dip down, immediately come back up after sweeping. So that signals a big retrace. Typically, so SMT of these highs, I could have entered here for any of these. However, after seeing one, how far it extended, and two, the reaction it had after sweeping this low here, I don't want to be in that, right? So we will wait for another SMT or a macro. We get one, get an expansion below this low, create this fair value gap. We enter here, stop above here, target lows, lows. Well, obviously the whole thing, but usually lunch doesn't retrace the whole thing. I'll speculate as to why that happened at the end of this, but again, another macro, so we retrace as high as we can. This actually might, yep, that goes up there. So retrace here, and then we continue lower. We're not at a time here where we need to retrace, kind of just continually expanding lower and lower and lower. For value gaps along the way, hit this macro where we reverse. We get one support here, order block, second support, this inverse here. Now, this trade could have been taken. However, the risk to reward is not good. This high would have been taken, and I would have been out at break even. So, and even so, this would have been this. Stop would have had to have been a constant encroachment. So, one, that would have stopped us out there. Two, that means I'd have to target these. And with how price action has been today, I would not be confident that price would give me a large enough expansion in a timely manner, and I'd be correct. However, the 3 o'clock macro provided more. We get a macro here, confirmation here, order block here, entry would have been this, stop at consequent encroachment, targeting highs, highs, and highs. Would have only gotten these ones because I would have most likely closed before market closed. But yeah, honestly, really weird day. Let's go down to 15. Really sloppy buy side price action, really expansive lunch reversal. And then we get this huge spike. I assume this spike is caused by Trump speaking, but so why did we have trouble working to the upside? Things I can think of is that the dollar was, well, dollar was dicking around. No, matter of fact, dollar was tanking. So we should have had the ability to go up. So that's out of the table. Trying to think. We didn't. Oops, sorry. We didn't hit anything. We're in this hourly. It honestly could just be a case of Friday, Monday, Tuesday were huge days. It's the middle of the week. We have a small day today, so we can expand Thursday, Friday. That's possible. It's very possible. Because the way I see it, besides this gap, which we fully closed here with this sweep, this is all balanced. This hourly could have given us rejection. I really can't think of anything else. Yeah, I honestly, I kind of at a loss for why it came so low. The only thing that I can come up with is last couple of days have been very, very, very high volume. So we needed a low volume day. Um, Meaning we're going to get a lot of price action like this. Probably better to see on the 5. A lot of wicks, right? A lot of wicks here. And then we extend to the downside at 12. Let's go visit our friend the dollar because the dollar is rising. So that one makes sense. Now, why price was held back for AM session when dollar was going down, I have no clue. But I'm just going to stick it with we've had a lot of expansive days. We needed this day to kind of chill, and then Thursday, Friday, hoping that better, cleaner price action from there. So yeah, this has been your market review for February 26, 2025.